If you have to complete a self-assessment tax return and then pay any tax due, you need to make sure you meet certain deadlines. If you don't, you could get a penalty. In this video, you're going to find out about the various deadlines and penalties for the self-assessment tax system. There'll also be some questions for you to answer on the topic. Watching the video should help you avoid failing to meet those deadlines and therefore ever being penalised by HMRC for this reason. Now, perhaps one of the most important deadlines is the one for actually sending your self-assessment tax return to HMRC. However, the date of the deadline varies depending on how you send your return. HMRC usually writes to you after the 5th of April, in other words, after the end of the tax year, reminding you to complete a tax return and telling you when it needs to be sent back. Now, if you do your tax return on paper and then pop it into the post, it must arrive with HMRC by midnight on the 31st of October, following the end of the tax year. This gives you roughly 7 months to do it. But if you fill in your tax return online, you have until midnight on the 31st of January following the end of the tax year. This gives you roughly 10 months. That's 3 months more than if you use the paper method. So filling in your tax return online gives you a longer deadline, and there are lots of other advantages, such as having the tax worked out for you and a reduction in the number of errors you could make. Bear in mind that you don't need to wait until the deadline. Once you have all the necessary records in place, you can complete your tax return straight away. This means you can then concentrate on running your business without worrying about dates or fines anymore. While we're on the subject, I should just mention something about record keeping. You do, of course, have to maintain adequate business records, and if you fail to do so, you could receive a penalty of up to £3,000. Now, there are some exceptions to the October and January deadlines. If you receive your letter from HMRC after the 31st of July for paper returns or the 31st of October for online returns, your deadline will be 3 months from the date you receive it. So, for example, if you don't receive your letter until the 16th of November, your online return doesn't have to reach HMRC until midnight on the 16th of February. So sending your self-assessment tax return to HMRC online is a lot better than using the paper method. But what if, for some reason, you miss the deadline? Well, you'll receive an automatic penalty of £100. If the return is late by more than 3 months, you'll also receive a penalty of £10 for each day that it's late, up to a maximum of £900. If it's later by more than 6 months, but less than 12, you'll be fined £300 or 5% of the tax you owe, whichever is greater. But this is in addition to the fines I've just mentioned. And if it's later by more than 12 months, I'm afraid you'll be fined another £300 or 5% of the tax you owe, whichever is greater. You could even be fined 100% of the tax you owe, but only in serious cases. So really, it's best just to send in your return on time. But what if you think you have a good reason for missing the deadline? Well, you need to give HMRC what they call a reasonable excuse. There's no definitive list of reasonable excuses, but for example, if there was a long-term postal strike or a problem with the online service that couldn't be resolved, HMRC may waive the penalty. Being seriously ill or the death of a close family member might also count. So what if you think you've got a reasonable excuse? It's best to contact HMRC as soon as possible. Write to your tax office, as HMRC can't accept this information over the phone. Right, so we've covered deadlines and penalties for sending your self-assessment tax return to HMRC and the importance of record keeping. What about actually paying any tax due? What are the deadlines for this? You must pay any tax due by the 31st of January following the end of the tax year. The tax year runs from the 6th of April to the 5th of April the following calendar year. So you have to pay any tax due for tax year 1 by the 31st of January in tax year 2. The payment deadline is the same for both paper and online returns. Before we go on, I should just point out that on the 31st of January, you don't just pay the tax you owe for that tax return. So for example, you start self-employment on the 1st of May in tax year 1. On the 31st of January in tax year 2, you pay the tax you owe for tax year 1, called a balancing payment, and the first of 2 payments on account for tax year 2. That is the current tax year. You pay your second payment on account for tax year 2 on the 31st of July, which is actually in tax year 3. On the 31st of January in tax year 3, you pay a balancing payment, which is the difference between the total of the 2 payments on account you've already made and the tax you owe for tax year 2. You also pay your first of 2 payments on account for tax year 3, which is equal to half the previous year's tax bill. So as you can see, payments on account are basically payments for parts of the tax year that have passed but that you haven't actually submitted a tax return for. Don't worry, you don't always have to pay them. It depends on the amount of tax you owe and the kind of income you receive. What all this means is that if you've recently started in business, you need to start putting money aside each month. You can then use what you've saved when paying your first tax bill. It doesn't have to be enough to cover the whole bill. Even saving a little bit means that you won't have to find the full amount you owe in one go. HMRC have a Ready Reckoner to help you budget for your tax payments. Now, what if you miss a payment deadline? If you pay your tax at least 30 days after the deadline, you'll be fined 5% of the outstanding amount. If you still haven't paid 6 months after the tax was due, you'll be fined another 5%. And a further 5% of the tax due if you don't pay until after another 6 months. So, say you owe £1,000 in tax, but you don't pay until 40 days after the deadline of the 31st of January, you get a £50 penalty. If you don't pay the £1,000 in tax you owe until the 19th of August, it's more than 6 months late and you'll get an additional £50 penalty, so you'll owe an extra £100 in total. If you don't pay the £1,000 in tax you owe until the 26th of February the following year, it's more than 12 months late and you'll get an additional £50 penalty, so you'll owe an extra £150 in total. That's a 15% increase in the amount owed. It's also worth mentioning that HMRC charges interest on any outstanding tax and penalty charges too. Clearly, the penalties can mount up, but you can avoid them by simply paying by the deadline. And as I said a little earlier, it really helps if you put money aside over the course of the year. Paying your tax bill in full and on time will be much easier and improve cash flow. Of course, it helps to be organised, but if you think there's a chance you might miss a deadline, there's a tool on our website. Once you've completed it, you can get a list of the deadlines for the coming 12 months that apply to your situation. If you're registered with our site, you can also sign up to receive email alerts to remind you of each upcoming deadline. We now have 4 multiple choice questions for you to answer on self-assessment deadlines and penalties. Each one has 3 options to choose from. We'll give you the answer at the end of each question. Question 1. What is the deadline for sending your self-assessment tax return to HMRC online? Is it A, the 31st of January following the end of the tax year? Is it B, the 5th of April following the end of the tax year? Or is it C, the 31st of October following the end of the tax year? The answer is A. The deadline for sending HMRC your self-assessment tax return online is the 31st of January following the end of the tax year. Question 2. When might your self-assessment tax return deadline be extended? Is it A, if you write a letter to HMRC telling them that you want the deadline extended? Is it B, if less than 3 months before the deadline you receive a letter from HMRC saying that you must complete a self-assessment tax return? Or is it C, if HMRC writes to you asking if you want the deadline extended and you say yes? The answer is B. Your self-assessment tax return deadline might be extended if less than 3 months before the deadline you receive a letter from HMRC saying that you must complete a tax return. Question 3. Which of the following would not be a reasonable excuse for sending HMRC your self-assessment tax return late? Is it A, there was industrial action by the Royal Mail over a lengthy period of time in the run-up to the 31st of October deadline for paper returns? Is it B, you forgot that you had to complete a self-assessment tax return? Or is it C, you lost your tax documents through theft, fire or flood and you can't replace them in time? The answer is B. Forgetting that you had to complete a self-assessment tax return is not a reasonable excuse for sending HMRC your tax return late. Question 4. What is the deadline for paying any tax you owe to HMRC? Is it A, the 31st of January following the end of the tax year? Is it B, the 5th of April following the end of the tax year? Or is it C, the 31st of October following the end of the tax year? The answer is A. You have until the 31st of January to pay the tax you owe for the previous tax year. And that's the end of the questions and the end of this video. Thanks for watching.